Ever ponder the magic behind the stock market's rise and fall? Well, let's delve into the crux of this fascinating world. You see, the stock market is essentially a grand stage where buyers and sellers play their parts. They come together to trade shares or stocks of companies that are publicly held. Think of it as a bustling marketplace where the goods on offer are pieces of ownership in some of the world's biggest companies. But there's more to the stock market than just buying and selling. It's also a powerful tool for wealth creation. With careful planning and a bit of patience, you could grow your money exponentially. But let's not forget, the stock market is not without its risks. The very forces that can help your money grow can also lead to losses. So the stock market is more than just a mysterious entity. It's a bustling marketplace teeming with activity. Have you ever wondered why stock prices fluctuate? Well, it's not magic or guesswork, but a complex interplay of various factors that determine a stock's price at any given moment. At the heart of it all are company earnings. If a company is profitable and expected to continue growing, its stock price typically rises. Conversely, if its profits dwindle, the stock price will likely fall. But that's not the whole story. Economic indicators like inflation rates, unemployment figures, and GDP growth also come into play. If the economy is robust, stock prices generally go up, and if it's struggling, they tend to decrease. Lastly, there's investor sentiment, which can be fickle. If investors are optimistic about a company or the market, they buy more stocks, driving prices up. If they're pessimistic, they sell, pushing prices down. Thus, stock prices are not random. They're a reflection of a company's perceived value and the broader economic environment. Are you an investor or a speculator? Now, this is a question that often stirs up quite a debate. So let's break it down, shall we? When it comes to the stock market, investing is akin to planting a tree. You carefully choose a seed, plant it, and patiently wait for it to grow over time. It's a long-term game where you buy stocks with the expectation that the company's value will increase over the years. Speculating, on the other hand, is more like catching a wave. It involves buying and selling stocks based on short-term price fluctuations, trying to make a quick profit. It's fast, it's thrilling, but it's also a lot riskier. The key difference here lies in the time horizon and risk level. Investing is for the patient, seeking steady growth. Speculating is for the daring, ready to take on higher risks for potentially higher returns. Whether you're an investor or a speculator, understanding the stock market can be your key to financial growth.